Afternoon traders, hope everybody's doing well and having a great trading week. Just a quick video to highlight KiwiCAD. KiwiCAD has moved over 1,000 points in the last 7 to 8 weeks, and we can see this huge candle that closed last week is a very strong sign of exhaustion. And talking to some of you guys this morning on coaching, a lot of you missed this opportunity. Or missed a lot of these opportunities. You are simply looking for what we call textbook trend, where you're looking for your cyclicity perhaps to confirm your trend and not paying attention to markets that are clearly showing direction. Remember, when a market moves, it's moved on strength and weakness. We can see at during this period that Kiwi was a hell of a lot stronger than CAD. So when you're an intraday technical based trader, you really need to nail that down to understand, is it Kiwi the main mover being incredibly strong? Or is it the Canadian dollar oh so weak? Now, I personally don't trade a weekly time frame, but I definitely did take more advantage of the most recent opportunities when we broke this last weekly high. This confirmed we were no longer in a weekly downtrend, as prices now made a higher high in a downtrend. It's the turning points that we're now looking for as a potential change in trend. This also looks like a very aggressive head and shoulders pattern pending, or inverse head and shoulders pattern. So look, let's just break this down in a little bit more context. So as we said, 1,000 point move over the last 7 or 8 weeks. Looking at a daily time frame, we can really start to see the price running out of steam. Now, what we look for is, in an uptrend, strong buying, weak selling, strong buying, weak selling. Now, it was quite apparent that in this move to the downside, look, you've got nice strong selling in here, but we must pay attention to the amount of buyers that are coming into this move. Phase 2s look typically quite strong. So prior to this being in a downwards move, buyers are fighting back in. Now look, even in this last push down, even if you're very new to this game, look how many green bars are in comparison to the phase when we were strong selling up here. It shows there's a constant fight, a battle, and a pending turning point is due. So a lot of key levels, 77 was an area that price interacted with, and it was a great turning point to then look for that second bounce to take you to the upside. So understanding that we've now seen this move, and I think we can all agree that if we're daily time frame traders and we're not getting in on these turning points or these turning points, or perhaps potentially after the 2050 cross, which confirms the change of direction, there's not many opportunities to actually get into this move. So again, I don't personally take many trades from a weekly or a daily time frame, but they're two time frames that I pay attention to understand market direction, to look at the bigger picture, to give us a bit of a longer term path that we can then use the smaller time frames that cycle more frequently, provide more bars, more cycles, more opportunities to get ourselves in and out of. So just to take you to the 4-hour time frame, where, to be honest, we took a lot of our positions from the 4-hour. And as we can see, that last amount of selling, buyers come back in and sellers have got nothing in the tank. This is the first, bear with me, first head and shoulders or inverse head and shoulders pattern we identified before the move took place. So this is when we're on, I would say, our amber light. We're pending. We're waiting to go. We're understanding that the sellers have left the market. We've seen a reversal pattern that typically leads us into an upwards push, but it's still very choppy and very messy. Some of the guys on the trading floor did take positions here and were able to hold throughout. Personally, no. I like to get in and get out of opportunities. So again, for some of you that are perhaps newer to the market, use the 2050 crossover. And I don't want you using this forever, but at the start of your trading career, it's going to give you a bit of guidance. It's going to help you start identifying trends and directions when the market's confirmed its overall direction. And I think a lot of new traders spend far too much time looking at the intricate detail, trying to work out whether we're in an uptrend or downtrend. So look, get the crossover out of the way, let the market show you and lead you into where it's going. So phase 1 goes up, pull back into the 20 moving average, bounce, off we go. And we've got multiple opportunities to get into these moves as the move starts to progress onwards and upwards. So on the same period, we pretty much had maybe 1 or 2 trades on a daily time frame. You've now got nearly 9 or 10 trades on a 4-hourly time frame. So by understanding the bigger picture, that leads the way. That shows you where we're going. The smaller time frames, because they provide more bars, more cycles, more opportunities, give us a lot more trading opportunities that are in a confirmed trend that's going to allow us to make money on an easier market or easier market conditions. The same process applies when we then say to ourselves, look, the 4-hour is in an uptrend now. My daily's in an uptrend. My 1 hour's in an uptrend. I'm going to focus on this area the most here after this pullback, so we know we get the start of a move. Our higher time frames are all in a confirmed direction. Now, as we know that there's 6 4-hourly bars inside one daily bar, hence why we have nearly 10 opportunities when there's just 1 or 2 on a daily. The area that I've highlighted here is a 4-hour uptrend phase 1. When I now drop down to the 1 hour time frame, we can now see the same process applies. We've obviously got 4 1-hour candles inside a 4-hourly candle. So I have 1 trade, 2 trade, 3 trade, 4 trade, 5 trade, 6 trades, and there's your cross. So we now have 6 trades on the 1 hour time frame in that last small phase. Bearing in mind, if we took the whole trend that we've seen in recent time, there's the 4-hour head and shoulders we highlighted, there would be hundreds of opportunities onwards and upwards. So the point of the matter is, if we're not finding clear cyclicity on a daily time frame, identify the most recent strong weak currency, look for daily direction where we're seeing a burst of excitement, strong moves to the upside, and use the smaller time frames to chop your way into it. Look for cyclicity, trade in the direction of the higher time frame trend, and I would say until you're consistent, just look for a 1-to-1, then manage. So identify the bounce from the 20 moving average. Again, if you're new to this, look for a first buyer's candle to close back above the 20 moving average. That allows the market to lead you into the move, to show you that the buyers are stepping in. There's buyers in play as you're entering the move. You're not trying to outsmart the market, getting in early at a turning point. Entry and stop should be on the first bar that closes above the 20 moving average, and look for a 1-to-1. Measure it, look for a 1-to-1 minimum. So look, lots of opportunities, guys. We've also seen this across yen pairs recently, and of course when the dollar was really surging back in August, September. But good stuff, guys. Keep going. Anything you need, always drop myself or one of the team a message. But this is just a clear outline of lots of trading opportunities on one currency pair recently. Those of you that work with us a little further, you'd understand methods like scaling in, and this would be the perfect, or was the perfect currency pair to do so. All the best, guys. Hope to see you all soon, and goodbye.